Hey family, welcome to the very first episode of Market Watch. Market Watch is going to be delivered in a video format and is going to be an over-the-shoulder view of what I believe to be happening within the markets in the coming week. We will be having some mini lessons in the coming weeks on how we can apply real market scenarios to what has been previously happening. And of course, this is built for all of you, so I value your feedback. So if you do have any insights or would like me to feature something, please email me at the email below, brianatma@gmail.com, and in the subject line, please put Market Watch Feedback. All right, let's get started now on this week's Market Watch. For you guys that don't know what the US dollar index is yet, it's an index of the value of the United States dollar relative to a basket of foreign currencies, often referred to as a basket of US trade partners' currencies. So if you take a look below here, we can see how the DXY is weighted against the US dollar. It is most heavily weighted against the euro at 57.6%. Next, the Japanese yen at 13.6%. Then we have the pound sterling at just under 12%. The Canadian dollar at 9.1%. The Swedish krona at 4.2%. And lastly, the Swiss franc at 3.6%. So what does this mean to us? In front of me now, you guys can see a chart of the US dollar index, otherwise known as the DXY. And you can see that we've been kind of floating between a range of 93 and 100. But recently, we've been kind of trapped inside of two downward sloping trend lines. And between that, we've been kind of consolidating in between the two. You can see here now that we've been kind of consolidating sideways and kind of been trading between this band. If you look closely, it looks like we're about to break out of this downward sloping trend line. So what does this mean to us? Well, if we know that it is weighted against a basket of different currencies, we can use this as a measurement against the US dollar in comparison to how it's going to be trading against other currencies. So if we see this break above 96 and come back and retest for support, we can use this as a prediction for telling us that we're going to have some upcoming strength in the US dollar here. The main takeaway that I want you guys to have here for the DXY is that we're at a key inflection point with the US dollar. We're kind of at this tipping point where we're about to prepare for some larger moves within the market. But what I want you guys to do as traders is to be very patient, wait for the technicals to form, and then we'll get in at the right time. So let's go farther into Market Watch as we dig into the euro dollar. As we take a look at the overall big picture of the euro dollar, dating back to early 2015, we can see that we've been trading within a range of around 1.05 all the way up to 1.15. Recently, we broke this upward sloping trend line and have now kind of come back and retested for support at the key area of 1.1150. If you take a closer look here, you can see that we've been consolidating now for a few days without really having a clear trend direction. Right now, I'm just being calm and patient. I'm predicting a little bit of a pullback to the area of 1.1150, and then I might be looking at scaling into a sell position as I predict a further decline in the euro. Now, what you guys can see here is I'm looking at the pound dollar on the daily chart. We can see that after the whole Brexit issue vote, we've had a massive decline within the pound. A lot of traders, including myself, have been predicting a further decline within the pound, but we are kind of at a weird area where we don't really have any good safety nets or good areas to enter within the market. You can see that if we look closer, the market has just absolutely plummeted after the Brexit vote. Now, we do look like we are getting a slight pullback, which is very good, but right now we just have to be calm and patient until the market's going to come to an area of value, possibly even a Fibonacci level if we draw in here. Coming up to at least our 0.382 Fibonacci retracement level before I'm looking at committing to adding a position to the downside. I want to have a really good safety area where I can have a stop. I don't have any last clear swing highs in order to have my safety for my stop. So right now, this is just going to be a waiting game. I'm going to be sitting on my hands and see how this further develops in the coming weeks. Let's take a look at the euro pound. One thing that I want you guys to really understand about what's been going on lately is if we look at the weekly chart, we have broken this very long-term downward sloping trend line. We broke through this during the Brexit vote, but my bias is still that it is in Euro's best interest to have the pound strong, and with all the other issues happening within the Eurozone right now, I'm expecting a further decline within the Euro. So how would I play this out? I definitely don't want to be shorting against a bullish engulfing on the weekly, but let's take a look at the daily chart as we can see some further deceleration and decline. So how would I play out this trade setup on the Euro pound? Well, first, I want to see further deceleration, possibly around this 0.86,000 level, and then from there, maybe even possibly see a double top before I commit to going short. And then I want to see a break below our downward sloping trend line and also our area value at 0.8120, and then I'd look to scale into my position even farther. Following now with the US dollar and the Swiss franc on the weekly chart, we can see that price has been forming this formation for quite some time now. Last week we closed above the key support area at 0.9790, and right now we're still kind of playing between these two ranges of these sloping trend lines. Going to the daily now, we can see that we're getting this squeeze happening to the point where we're going to need to break either above or below this funnel. Right now, I'm currently waiting patiently for a break and retest of the upward or downward sloping trend line before I'm willing to commit to a long-term position with this pair. Moving on to the dollar yen, I want you guys to take a big picture look at this with me on the weekly chart right here. Looking all the way back to the mid-1990s, we can see that we're at a value right now around the area of 101. And we can see that over time, this has acted as a major significant area of value in which to buy or sell off of. So let's take a closer look now to where we are here, and we can see that basically we've had some really good deceleration around this downtrend. We've been following this downward sloping trend line for quite some time now. We've had some good deceleration around this 101 area, and we can see that we've now rallied up from here, and we could possibly be looking at seeing a farther pullback. My prediction is we're going to be going up to around the 105.50 area. And then from there, we'll see if we'll continue to the downside or if the Bank of Japan is going to take some matters into their own hands and try to do something radical to get their currency back on track to where they're hoping it should be. Jumping now to one of my favorite pairs, the Aussie dollar, we can see that we've been respecting this long-term trend line all the way since back into September of 2014. And now we've been basically squeezing between this funnel here again once more. And we're coming up to a tipping point where we're either going to be looking at, hopefully, is the trend going to be continuing to the downside, or are we going to have a break above this long-term trend line and possibly be in a bull market here on the Aussie? For here right now, I'm just waiting to be patient. I either want to see some further deceleration at the top of this downward sloping trend line, or wait till it breaks above, comes back, and does a bounce and retest. So it's going to break through, it's going to come back, and then we'll look to taking a position to the upside. But right now, if we can actually just play in some Fibonacci, we can see that we're just at an area of a 618 pullback. This could and should still continue to the downside, but right now we are at a point where I'm just waiting to really kind of see which way the market is deciding to go, and then I'm going to look for there to make a decision once the market tells me what its decision is, whether it wants to break to the upside and we could be in a new bull market, or if it's going to continue to the downside and we could possibly take out this trend line that's gone back to early January of 2016. Let's move along to US oil now. Taking a look now at US oil, we can see that we've been trading within a range now from $44 a barrel to $50 a barrel. Now, oil seems like it is rolling over a bit, and we could see a continuation to the downside if we will break the key area of $44. If we break underneath here, which will also coincide with our 200 EMA, and we could see a farther decline in oil. But right now, I'm just being patient. I'm waiting for the market to tell me what it wants to do, if we're going to decelerate on this area of $44, or if we're going to break that, retest it, and continue to the downside. Let's take a look at the US dollar and the Canadian dollar, as the Canadian dollar is very much affected by the trading prices in oil. Taking a look now at the US Canadian dollar, you can see that the theme that I've been talking about, this tipping point, is very obvious in a lot of these currency pairs. Just being super calm and patient and waiting to see what the market wants to do to us. Right now, we're expecting that oil is going to decline. We're going to see a rally in the US dollar. And right now that you can see that we're looking at breaking this long-term trend line and possibly having the US dollar rally above here. So you can see this overall thesis of having these clear tipping points of this US dollar really playing out. So what am I doing this week to prepare for this? I'm just going to wait, and I'm going to be looking heavily on the DXY chart. I want to see a rally from this chart happen, a break above this long-term trend line, a break above 96 really cleanly, and from there we're going to see the market start to really move and be affected by the new strength within the US dollar. If we have this break, we will probably see a rally back up to 100, and that will be shown in the next few weeks of just how strong the US dollar can be with all the other stuff going on within the Eurozone, within the pound. There seems to be a flee to the US dollar, or a flee to safety for that for investors' capital. To end this week's Market Watch, I really just want to say thank you to all the boys and girls out there, all the GoFX students that have really made this possible for us. We really value your input and your feedback, and we'd really like to hear from you. So if you have any insights or would like me to feature something, please email me at the email below, brianabma@gmail.com, and in the subject line, please put Market Watch feedback. This is a fresh start to the second half of 2016, and we're really committed to making this year the best year for us and for all of you guys as well. As always, protect yourselves in the market this week and have a great week ahead. We will talk to you this week, Wednesday, on GoTV.